Ever wondered what happens to your business funds if your bank suddenly closes its doors? It's a scary thought, right? Especially for small business owners, every penny counts, and the security of those funds is paramount. This fear is precisely why the FDIC, or the Federal Deposit Insurance Corporation, exists. But does FDIC insurance cover all bank accounts? Specifically, if you're using a modern digital banking platform like NorthOne, are your deposits protected? That's exactly what we're going to unpack today. Let's rewind a bit. Imagine a time before deposit insurance. Bank runs were a real and devastating phenomenon. If people lost faith in a bank, they'd rush to withdraw their money, creating a domino effect that could bankrupt the institution and wipe out depositors' savings. This was a major problem during the Great Depression, leading to the creation of the FDIC in 1933. The FDIC's primary role is to protect depositors' money in the event of a bank failure. It does this by insuring deposits up to a certain amount, currently $250,000 per depositor, per insured bank, for each account ownership category. So, if your bank goes under, the FDIC steps in to make sure you get your money back, up to that limit. This dramatically reduces the risk of bank runs and helps maintain stability in the financial system. Now, here's where things get interesting when we talk about modern fintech companies like NorthOne. NorthOne isn't a bank itself. It's a financial technology company that partners with FDIC-insured banks to provide banking services to small businesses. This is a crucial distinction. Because NorthOne partners with established banks, your deposits held through NorthOne are FDIC-insured. Let's break down how this works. When you open a NorthOne account, your money isn't directly held by NorthOne. Instead, it's held at one of their partner banks. These partner banks are members of the FDIC, meaning they're subject to the same regulations and oversight as traditional brick-and-mortar banks. This partnership structure is common among many fintech companies. They leverage the infrastructure and regulatory compliance of existing banks to offer innovative financial products and services. So, to definitively answer the question, yes, funds held in NorthOne accounts are FDIC insured, up to the standard $250,000 limit per depositor, per insured bank, for each account ownership category. This means you can have peace of mind knowing your business funds are protected in the unlikely event of a partner bank failure. But it's important to understand a few key nuances. The $250,000 coverage limit applies per depositor, per insured bank, for each account ownership category. This means if you have multiple accounts at the same partner bank through NorthOne, the total coverage limit across all those accounts is still $250,000. However, if NorthOne partners with multiple banks, and your funds are spread across these different partner banks, you could potentially have coverage exceeding $250,000. It's always a good idea to check with NorthOne directly or review their terms of service to understand exactly which banks are holding your funds. Another important point to clarify is that FDIC insurance covers deposits, not investments. So, if you're using NorthOne for checking, savings, or other deposit accounts, your funds are protected. However, if NorthOne were to offer investment products, those wouldn't be covered by FDIC insurance. Investment products carry inherent market risks, and their value can fluctuate. Now, why is this FDIC insurance so important for small business owners? Well, small businesses often operate with tighter margins than larger corporations. A sudden loss of funds could be devastating. FDIC insurance provides a safety net, ensuring that your hard-earned money is protected, even in the worst-case scenario. This allows you to focus on running your business without constantly worrying about the security of your deposits. Beyond the peace of mind, FDIC insurance also contributes to the overall stability of the financial system. By insuring deposits, the FDIC prevents widespread panic and bank runs, which can have cascading effects on the economy. This stability is crucial for small businesses as it creates a more predictable and reliable financial environment. Let's address a few common misconceptions. Some people might think that because NorthOne is a digital platform, it's somehow less secure than a traditional bank. This is simply not true. The security of your deposits is determined by the FDIC insurance provided through their partner banks, not by the technological platform itself. In fact, many digital banking platforms often employ advanced security measures to protect your data and transactions. Another misconception is that FDIC insurance only applies to large banks. This is also incorrect. FDIC insurance covers all member banks, regardless of their size. Whether it's a small community bank or a large national institution, if it's a member of the FDIC, your deposits are protected. So, what are the key takeaways here? First, funds held in NorthOne accounts are indeed FDIC insured, thanks to their partnerships with FDIC insured banks. Second, the standard coverage limit is $250,000 per depositor, per insured bank, for each account ownership category. Third, FDIC insurance provides crucial protection for small business owners, ensuring the safety of their deposits and contributing to the stability of the financial system. And finally, don't confuse the technology platform with the actual holder of the funds. NorthOne facilitates the banking services, but your money is ultimately held at a regulated, FDIC-insured bank. Understanding the intricacies of FDIC insurance and how it applies to modern banking platforms like NorthOne is essential for every business owner. It allows you to make informed decisions about where you keep your money and provides a crucial layer of protection in an ever-changing financial landscape. With that said, thanks for watching, and until next time.